Global share markets have returned to all-time highs, and in this episode we're going to try and determine whether they're going to keep going higher from here or not. Hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 9th of January 2024, and just before I get into it, could you please click the like and subscribe button? It takes 2 seconds of your time and it would really help us out a lot. You also need to be aware that anything I say is general advice only, so it doesn't consider your personal financial circumstances, and you have to decide if it's appropriate for you. So the global rally has been pretty immense. Throughout the months of November and December, we saw most markets in the Western world deliver greater than 10% share price growth on average. It's been absolutely ridiculous. If you were to tell me at the end of October this is what we would have seen, I would have questioned you quite heavily, because it's been pretty unbelievable. We've seen share prices in the US pretty much go to all-time highs. We've seen share prices in Australia at all-time highs. The Japanese market is at 30-something year highs. German market is at all-time highs. Plenty of other sort of success stories around the world. And obviously this is built on the belief that interest rates are at their peak and that we're going to see rate cuts soon. In fact, many in the US at least are forecasting rate cuts as early as March. Some people are a little bit more cautious, forecasting rate cuts in the middle of 2024, around June or July, and then some people push it out further. Overall, it really was, the rally was sort of extended by the Federal Reserve meeting in December, where the Fed basically, they've been going very, very hawkishly for some time, saying, don't get your hopes up, don't get your hopes up. And it seemed like they flipped on a dime right at the December meeting and basically, admitted to the fact that maybe we will see a series of rate cuts in 2024. And that really opened the floodgates. It allowed everyone to jump back in the market, and it allowed prices to push right back to, all-time highs. Now, you do have to keep in mind that when prices were at all-time highs previously, interest rates were much, much lower. I think there was a much better earnings outlook from companies, and I think that the current all-time high levels, aren't necessarily quite as justified unless basically things continue to trend in the right direction for share markets, and we'll touch on that now. So the first thing to touch on will be the jobs report. Last Friday we had the US jobs data. The jobs report was probably slightly stronger than expected, and to me I thought it probably wasn't quite what the market wanted to see. In fact, we saw more jobs created than expected, we saw lower unemployment than expected, and overall that would suggest that inflation is probably a little bit stronger than expected. Now, if you drilled a bit deeper into the numbers, things weren't quite as rosy, but regardless, from a headline level, I would have expected a fall on the back of that data, because for me at least it suggested that perhaps we're going to see inflation hold a bit stickier than everyone's forecasted. And that leads into the next major report. So on Friday this week, we're going to see the US inflation data. We're going to see the US CPI growth for the month of December. This CPI growth is expected to show headline CPI, or headline inflation, actually tick up a little bit from November. We're also expecting to see core inflation tick back down a little bit. Core inflation has been a little bit stickier, so core coming down is perhaps something that the market's been hopeful of, perhaps what's helped this rally sort of hold up and continue a bit higher, because in isolation, with the headline number ticking back up, again, that's not a great data point for the market, especially when this rally has been built on the hopes of inflation continuing to fall. So overall, there's two pretty big news and events: the jobs data on Friday, the CPI data this Friday, and just from the current sort of expectations and from what's actually happened, for me, I don't think it really justifies a continued push higher in the market or in share markets. But momentum does sort of have a ability to keep pushing things beyond where you expect them to stall and beyond perhaps where they should stall, and that might be the case here. Even with those two negative data points, it might take a little bit of time for prices to sort of stall out and then start to sort of reverse a little bit, and it could be from a higher level that reverse actually happens. So the other thing that will be coming up at the end of this week, more so next week, is the US company earnings reporting season. And this is sort of going to be another litmus test for the market to see if earnings justify current prices. Earnings growth is not expected to be particularly good. In fact, I think it's expected to be about 1% growth for the quarter, which is below historical averages. And so overall, not the best earnings season expected. However, I will caveat that by saying that in the US market, we tend to see the majority of companies outperform earnings expectations. Historically, it's about 3/4 of companies that outperform, and it really sort of goes to show the cozy relationship between companies and analysts, where basically the analysts tend to under forecast, the companies under promise, and then you get the outperformance, the over delivery, and that allows the prices to continue higher. Regardless, with the rally that we've seen, we would be expecting a stronger season, so it does sort of cause a bit of a risk for markets if earnings aren't quite that great. Does it really justify these all-time high prices? So let's have a look at the expected company price to earnings. We can see the operating earnings in blue, the reported earnings in red, and this is earnings relative to prices. So the expected data is the slightly darker data over there on the right-hand side, and basically it's expected to show that earnings relative to prices are basically prices relative to earnings are the highest they've been since 2021. So in any of the last sort of few years, currently the prices are about as expensive or perhaps even more expensive than they've been for the last few years. And so this is another sort of factor that we look at and say maybe prices are starting to get a little bit overextended relative to earnings. Like I said, earnings could outperform. We could see earnings come in better than expected, and that could cause that line not to be quite as steep or not to be quite as high. But another point to sort of suggest that maybe prices are a little bit overdone, relative to where earnings are likely to come out at. Now, another interesting point to look at perhaps is, the line sort of peaked out a little bit in June last year as well before coming off into the end of the year. And that was sort of the previous peaks for the market. The markets peaked out around the middle of last year, and then they fell for the next few months, basically bottoming out in October. So tends to be when this line does get a bit high, we tend to see selling in the market. Finally, let's touch on the weird of the week. And the weird of this week I wanted to touch on was just the sheer level of short interest in some of the lithium stocks. The one I'm going to highlight and the most shorted stock in our market at the moment is Pilbara Minerals. All lithium stocks, though, have an abnormally high level of short interest on them at the moment. Pilbara Minerals' short interest is over 20%, has been for around a month now, and this is absolutely extraordinary levels of short interest. Now, a lot of this is built on the fact that people are expecting lithium prices to remain weak for a while. Lithium prices have come off a lot over the past 18 months, and people are basically saying, oh, these lithium stocks are overvalued because lithium prices are weak. But lithium prices, their selling in lithium has slowed a little bit over the past few months. So I would have expected this number to start coming down a bit. That hasn't been the case. Shorts are still very, very, very high. And the other thing to note is that when short interest gets to a very high level, it can become harder for the share prices to continue falling. Given that, in this case, 20% of the outstanding shares of Pilbara Minerals are shorted, that's 20% of the company that's going to have to be bought back at some point soon. So 20% of the outstanding shares are going to have to be bought back. What does that mean? Well, it means that at some point soon, we're probably going to see a pretty big spike in Pilbara Minerals and in some of the other lithium companies, because these short sellers are going to have to buy those shares back on market. And when they do, that's going to help force the price higher. If I was short Pilbara Minerals, I'd be very, very, very nervous at the moment. I'd be extremely nervous, because all it's going to take is one good week for lithium prices, one good bit of news, one sort of, unexpected event that causes a small spike in Pilbara Minerals, and suddenly there's going to be a scramble to buy back the shorts. I don't think it's out of the question to see, double-digit percentage growth on individual days for Pilbara Minerals, because I think it looks to me like there's going to be a massive short squeeze at some point soon. So if I was short Pilbara Minerals, I'd be very, very nervous watching those lithium prices. So just something to keep in mind. It can be very hard for stocks to, fall when they are this heavily shorted, and eventually that will turn around. We will see these shorts closed, and that could trigger a massive amount of buying on market for Pilbara Minerals. So let's have a look at the charts for this week, guys. This is the Australian market, the XJO, the top 200 shares listed in Australia, and we can see that since the end of it's been on a massive run. We got to pretty much the all-time high early last week, I should say. Intraday, we got 0.1 points off the all-time high. We did pull back from there. We found some support at 74.50, and then we've obviously bounced today. We're going to have to wait and see if this is just a higher trough, or if this is a sign that we're going to come back to the longer term trend, in which case we could come back to sort of 73.50 maybe, something like that. Whether or not we do fall from here, at least in the short term, is going to come down to the US market. Now, to me, they actually look a little more bullish than we do. They did break their longer term uptrend line, but for me, they found some support at roughly 4,700 index points. They showed an extremely strong bullish jump overnight, and to me, really, it looks like they want to go back to the all-time high, roughly, of 4,800. That's going to be the major test as to whether we see fresh all-time highs or not, whether they get through that number this time around. If they don't get through that number this time around, for me, that's a fairly strong bearish signal that we're going to come back towards maybe 4,600, something like that. If they do sort of stall out at 4,800 or below, I imagine we'll see some pretty quick selling, and we'll see some, a lower trough than this trough here. If they do break through, however, the game's on. It's pretty hard to say where they will stall out. We'll see fresh all-time highs. We'll see new levels. And again, like I said, very hard to say where it's going to stop if that's the case. So that's it for this week, guys. I will wrap it up there. Markets are close to all-time highs. They've sold off a little bit. They're trying to push back up. And now we're going to have to wait and see if they can get back up or if the sellers start to take over once again. Some pretty key events coming up. We've got US CPI on Friday. We've got the company earnings reporting season. Overall, things are looking very toppy, but is it a precarious top or is it a stable top? We'll find out in the next week's edition, and hope you guys have a great week. Happy New Year.